All right, let's get some insights on the news that's shaping markets. For that, we want to welcome in Andrew Arons, founder and partner, Synergy Advisory Management Group. Andrew, thank you so much for joining us today. All right, so let's start. I want to start out with your market outlook. You had recently called the upside move before it occurred. So where do we go next? It seems like, we're kind of in this range-bound situation right now. Where do we go next? Where does the market go?
Yeah, well, we made a big move in the market, and that was anticipated on my end. I really thought we were going to see the market snap back quickly, and it did. And right now, I think we're just, right now in a trading range here, which is really, really good for the market. I think that being in a range like this for a little bit of time here, maybe for the next couple of weeks, with not a lot of volatility, could be really good for the market. And going forward, I'm expecting technology stocks to do very well. I do anticipate that we're going to see rate cuts coming. I know it may be later than we originally thought, but I'm thinking here July or September we'll see a rate cut, and I think it's going to be good for the overall market here.
So you're bullish on tech. I'm curious to know your views overall when you think about Mag 7, because not all of the members of Mag 7 are created equal, especially in this current climate, because, there are many who view, for instance, the Apples of the world still having tariff risk. But you've seen a recovery and you've seen stronger performance in, say, Meta, and Amazon still down year to date, but it's made some recovery. Nvidia higher. What do you like in the Mag 7?
Yeah, I mean, my two favorites are Meta and Amazon. I think that they're going to continue to do well. I mean, they made a big move. I mean, Meta is up about 30% in the last month, and Amazon's up 20. I think they're going to continue to dominate here. And I've been calling for it, but I do think that the markets are going to see new highs. By the end of the year, we'll be at new highs.
But Amazon still, there are some that I talked to who point out that Amazon still has tariff exposure. What's your view on that risk and the the upside potential that you see for Amazon?
Yeah, I mean, there are some risks, but Amazon is doing some cost cutting here, and whenever Amazon does some cost cutting, it really leads to revenue, and it helps the bottom line. And right now they're using AI robots, 750,000 AI robots, to improve margins and returns right now in their warehouses. So they're doing a lot of things. They're constantly innovating, and I continue to see Amazon doing very, very well going forward.
Okay, and you also like Uber. I'm curious to know, given how far it's run this year, it's had significant outperformance, up more than 40% year to date. Do you think it still has momentum from here?
I actually do. I think a lot of analysts and people are underestimating what's going on with Uber right now. I mean, they're going to actually complete 12 billion rides in 2025. I mean, that's a pretty astounding number. And, the younger generation are not drivers. A lot of the younger generation, 18 to 35-year-olds, there's like a 25% decrease in driving from, just a couple of decades ago. So I continue to see Uber outperforming. They have a couple of really good strategic partnerships that they have. And I think all that is just going to make Uber stronger.
Oh, you make a great point. I forgot about that aspect of Uber. You're right. Younger people aren't, going to get their driver's license like you used to. And it's not even about, like, for instance, in New York, you don't have as many people driving, for instance, because, people just take the subway here. So that's typical here. But in other parts of the country, that's not typical. So that's a great point that you made there about patterns with regard to how people are just getting around. Let's talk about another one. Now, this one may be a little bit of a contrarian view. You like Whirlpool. It has underperformed the S&P 500 year to date. I mean, year to date, the stock's down more than 20%. Why do you like this one?
Well, right now it's yielding 8.5%. I think Whirlpool is going to do very well when rates come down and housing picks up quite a bit. You're going to see a lot of new appliances and goods being sold. What I also like about Whirlpool is that they're really an American company, and they're going to benefit from the new tariff policies that we have. And I think that's going to bode very well for the company. And I think that we could see a very big turnaround in Whirlpool and collecting an 8.5% dividend while waiting for the turnaround here could be a very good opportunity.
But Andrew, they
Also,
do have tariff risk. I mean, when you say people buying new appliances, why wouldn't people just hold on to their appliances longer, essentially until they break, especially given the price increases that are expected to affect appliances?
well, there's still a lot of new housing going on right now, and I continue to see new housing, and all those new houses are going to need new appliances, right? And a couple of the builders are using Whirlpool exclusively, for their appliances in these new units that they're building. So I think that they're going to continue to do very well going forward.
Okay, well, that will be one to watch. I see your case for Uber. I see your case for Amazon and beyond. Whirlpool, I feel like we'll probably have to, we'll obviously see you again, but maybe in a year from now, we'll see where Whirlpool is.
I think
Andrew,
it's
we'll
gonna
leave
be
our conversation there. Great hearing your perspective. That's Andrew Arons, Synergy Advisory Management Group. We appreciate your time.